Entrepreneurship presents a unique math problem. Limitless options often feel like momentum, but they frequently lead to spinning your wheels. When you can do almost anything, you can easily waste enormous amounts of time executing tasks that have zero impact on your actual goals. Tweaking a website, researching a new product line, or spending another month getting ready creates a sense of activity while the most important priorities go ignored. Beyond the workload, there is the operational toll of leadership. While people see the company's exterior, they don't see the owner making high-stakes decisions alone, constantly wondering if they're making the right call. Traditional support systems often lack the necessary context to help. Employees cannot be objective sounding boards, friends rarely understand the business mechanics, and generic internet advice cannot account for your specific variables. Scaling a business requires a filter to separate daily distractions from the one piece of execution that actually demands attention today. Moving from solo trial and error to professional intervention creates a measurable shift in how a business functions. ICF data shows 80% of coaching clients report improved self-confidence and 70% improve work performance. But these gains must be weighed against isolation. Keeping a bad hire or pursuing the wrong market drains capital far faster than a coaching retainer. Most founders eventually realize they are the bottleneck in their own company. The challenge is finding an expert who solves a specific operational problem rather than offering generic platitudes. The return on investment for coaching relies on calibrating the coach's expertise to your exact stage of growth. A solo founder searching for their first dollar faces different physics than a veteran CEO managing a board of directors. This comparison matrix maps 3 distinct founder life cycles. We begin with the idea and launch phase, where the entire business model is still theoretical. At this stage, a coach helps you translate a vague concept into a validated offer that customers will actually pay for. This requires a specific trade-off. You must be willing to kill a project you love if the market data proves it won't be profitable. For early-stage founders, a coach provides value by stopping you from spending 6 months building a product that nobody wants. If you have already launched and found your customers, the problem changes. Growth often reaches a point where every decision routes directly through your desk. In the scaling and growth stage, the founder's own involvement becomes the primary limit on the company's expansion. The coaching outcome at this level is the creation of repeatable systems and a clear plan for delegation. The trade-off is the surrender of daily operational control. You have to step out of the doer role entirely. Relinquishing control is difficult for founders who built every process from scratch, as it requires trusting others with tasks you once handled yourself. The goal at this stage is to systematically remove the founder from daily operations so the company can expand independently. There is a common assumption that established teams and consistent revenue eliminate the need for outside guidance. The final row of our matrix covers the veteran stage, founders managing complex organizations or venture-backed growth. At this level, a coach acts as a high-level auditor, spotting logic gaps in a strategy before millions of dollars or years of effort are committed to a flawed path. This optimization requires abandoning the need to have every answer. It is a shift from being the smartest person in the room to being the most challenged. Veteran founders don't need a coach to teach them business fundamentals. They need a sparring partner to help them identify risks they are too close to the project to see. Now, we have to look closely at the financial equilibrium between risk and return when evaluating these costs. Founders often view a coach as an immediate, out-of-pocket expense, a luxury they can postpone. That view ignores the hard costs of operational errors. Keeping an underperforming employee on payroll for an extra 6 months or underpricing your core services for a year extracts cash from the business far faster than a coach. Treating a coach strictly as monthly overhead is incomplete math. It ignores the opportunity cost of delaying a decision you already know needs to be made. One avoided hiring mistake or one strategic choice made 3 months earlier often pays for the entire engagement. Coaching functions as a protective asset for your balance sheet. Paying a coach a monthly retainer does not create automatic growth. This decision tree reveals if you are ready for a professional coach. Are you executing consistently? If the answer is no, coaching will just become expensive busy work. If a founder expects the coach to run the business or provide a magic bullet, the engagement will fail. If you are not willing to act on the uncomfortable decisions identified during your sessions, the process is useless. But if you are already taking massive action and simply hitting friction from isolation or unoptimized systems, you are the ideal candidate. A coach is a catalyst for clarity. They help you find the few things that matter most, but they are not a substitute for doing the work. Because the match between founder and coach dictates the outcome, you should not choose a partner based on search rankings or ad spend. This is why the Noomii network exists. Since 2007, Noomii has built a vetted network of over 34,000 professional coaches, spanning more than 50 countries. Utilizing a curated matching service requires upfront transparency. You must be honest about your budget, your operational flaws, and your actual metrics. Noomii's SmartMatch process uses that data to provide a shortlist of up to 5 coaches, mapped to your industry, your stage of growth, and your personality. There will always be another book to read or another strategy to consider. At some point, you have to stop indefinitely researching your problems. The business moves when you make decisions and execute. Use a data-driven network to find the exact partner you need for your stage of growth, and start building.